Well, hello traders. Welcome to this week's forecast. Let's start off by looking at Forex Factory to get a view of the key data releases that are coming up next week. Next week is data heavy. We have the first FOMC of the year coming out on Wednesday. That will affect the dollar, and I'm sure every trader is watching to see what the Fed has in store for us. And we also have CPI data coming out for the Australian dollar, still on Wednesday, early morning hours during the Asian session. We have the Bank of England also coming out with their own statement on Thursday, just to give us a view of the official bank rate, and we'll be monitoring the tone of these central banks, that is the Fed and the Bank of England. Depending on their tone, it can determine market direction. We also have the infamous NFP, non-farm payrolls, coming out on Friday. This one usually causes some bit of intraday volatility, and usually a time to actually keep off the markets, especially if you're a day trader, you already have positions in, and you are also a scalper. So next week is data heavy. For me, it will be more of a wait and see. So let us deep dive into the charts to recap what the ideas that we had for last week and see what this coming week has in store for us. Let's start by looking at the USD yen. Remember, I mentioned that I was taking a long trade once price retraced to this swing high, right around 146.40. I did not get a fill, and you can see price is still consolidating, and it's a consolidation that still shows that there are signs that the bullish momentum will continue, because you are seeing the body is close towards the middle. The ranges of the body are not that wide compared to the ranges of the rally, so I still think the price is bullish. And I think for the coming week, once we close above 148.30, which looks like it's the current resistance point, and you can see it's an intermediate level clearly marked. You see that blue line? Let me make it thick. Clearly marked, that's the blue line. Once price closes and holds above that on a daily candle basis, I will be going long, because everything favors a long trade. We are above the 20-day EMA, and remember, when it comes to the EMA, I only use it on the daily time frame. So when on the daily time frame, if my candles are above the 20 EMA, I'll most likely be bullish than bearish. So for the coming week, that's what I'll be looking out for. And that's the only move I'll be tolerating, because remember, we have key data releases that are coming out, famously the FOMC. So price can go either way depending on the data releases that are coming out, but the most favorable data release will be a close above 148.30. If I see that, I'm getting long, and I'll be closing these unfilled order, because I don't think I'll want to see another movement towards this level to get a fill in view of the data releases that are coming out. I prefer a situation where the data release is favorable to my trade idea. We close above 148.30, then I get long on a retracement. Retracement may not really happen. It may or may not happen, but I just prefer trading retracements, especially now in a deep dive on the lower time frame, just to get a good entry and stop loss placement to allow me get I usually target a minimum of 2R. On the USD Swiss franc, I was anticipating a retracement towards the 85.50 region. That did not happen. I still have the order open. I've not closed it. I probably will close it in view of the data releases that are coming out, just to see how this retracement plays out. Remember, when you're trading a retracement, you don't want to see aggression in the retracement. Ideally, you want to see the bars of the retracement being smaller, at least the body ranges being smaller than the ranges of the rally. You also want to see a lot of those candles closing towards the middle, and you want to see a mix of candles. You want to see a lot of greens and reds, not necessarily one color. So I'll be monitoring this retracement, and depending on how it plays out, I may decide to close that order or just leave it to get filled. But so far, this is how it plays out. It played out. Remember, I trade the daily time frame, so I'm used to being patient. So don't be surprised that some of these orders did not get a fill. That's just how I trade. On the New Zealand, I had mentioned that if we get a retracement of the 6200, I'll be going short. But I also mentioned that we were closer to the 6050 region than we were to the 6200. So the more favorable scenario was to see a I moved to 6200, it was, sorry, 6050, where I mentioned that I'll probably go long. The reason why I wanted to go long, at least for the short term, is this is a role reversal level. We see at this point of support led to this swing point, and it held. See, held here, held here, held here. So I'm expecting it to hold at least short term, not very long. It may or may not hold. So I'll be watching out for how price plays out around the 6200. It may not be a direct fill where I put just uh, um, an order waiting fulfillment. It'll be one where I see how price plays out here on the lower time frame. So once price touches the 6050, I'll narrow down to the H4, see how price plays out. If I see bullish scenarios around there, then I'll get in and target the 6200 region. But as long as I can get a 2R on that movement, I'll be okay with that. I'll just target a 2R regardless of whether the 2R falls at 6200 or it falls slightly below 6200, because I'll be placing my trade on the H4 time chart. I'll also want to take you through a trade that I took, which was not part of my last week's analysis. This is the Euro Yen. As I was going through the charts, skimming through charts, I came across through this price action, which I love because it's a classic price action that fits well in my trading plan. I just want to take you through my idea. If you can see, we had been bearish since November. Look at this order flow. Most of these bars here are just one color, red. At one point, this bar was full red, so you can imagine the amount of volume that was required to have the bar body be down here around 53.161 at one point. So this was bearish, and this was a bearish play. You see this consolidation, most of these bars are within one bearish bar. Actually, we have more than 2 weeks of price action being engulfed by one bar. So one trading day engulfs more than, I don't know how many, these are more than 10 trading days. So clearly the order flow was bearish, but the bulls were stronger. We can see the close. I love breakouts that occur above the 20-day EMA. So this breakout occurred above the 20-day EMA and actually closed above this bearish candle that was engulfing this entire consolidation. I did not get a fill here because I think I had not monitored this chart well. But for last week, once I saw this price action, I decided this might be a good area to take along. Why? It is a broken swing point, and I'd mentioned in my previous videos that once a swing point is broken, always look for price to retrace to it as your first retracement, and it was a point of confluence. Why? Being a broken swing point and also a big figure, 160 region. That combination, and combine that with the fact that this breakout occurred above the 20-day EMA and the 20-day EMA is rising, I anticipated that these will hold and we'll see a move towards 150, around 163 and probably 164, a big figure, and the reason why we saw this down move. So I still have the trade in, but depending on how price action plays out, especially in view of the data releases, I might be managing this trade, but I'll be managing it in view of the technicals. I manage my trade guided by technicals, not emotions. So next, let us see let us look at price action I anticipate for this coming week. For this one, I'll do it differently. I'll just go through all the pairs I trade one by one, just to take you through my thinking process on how I approach my chart analysis. Starting as off is the euro dollar. I usually start my analysis on the weekly time frame. I use the weekly time frame to mark out my key support and resistance levels. These are actually the levels I usually target as my take profit areas when I'm doing my trades on the daily. And we can see clearly the next support point, in case we continue going lower, is this swing point here around 1.0756. I've actually marked it. It's actually a zone. Remember, trading support and resistance are zones, not necessarily a fixed point. So always think about support and resistance in ranges. So this is the area I'll be anticipating. And we started off well with this engulfing bar. Remember in my first video I took you through how this retracement and I anticipated it to continue go lower, and it actually did that. And a deep dive into the daily, we saw this fake out. Usually when fake outs occur, what we expect is price to retrace to that level where that fake out occurred. You see this zone? Usually these are good places to take that trade. This fake out occurred. Why is it a fake out? Price broke out of this level and it failed to hold a support. We immediately closed below. look for price to retrace to that level and sell, sell off, sell off, sell off. I'd marked these are intermediate levels. You can see price respecting it, and but my ultimate target for a short will have been here. I remember mentioning I did not get a fill. I think I was too specific with my entry, but I did monitor it well, and you can see how it's playing out. So for the coming week, especially in view of the key data releases, we have the FOMC on Wednesday and then NFP on Friday. We might see a lot of choppiness, choppiness, but anticipate that if we are going lower, if this momentum is to sustain, we probably see it stop around 1.0758, and if that breaks, then that I'll enter a swing trade. Let's say this level breaks, I'll enter a swing trade below this level, hoping for retracement and targeting some of these key levels here. You see, targeting 1.05, 1.0540. Yeah, I like taking entries in areas that are viewed important by the overall market. And the next area that is viewed important by the overall market is this zone here that I've marked by my rectangle. That's around 1.756 and 1.727. So if that breaks, I'll be going short. But for now, just monitoring how the bars are printed on the chart. So that's on the euro dollar. Pound is consolidating. You can see clearly marked in these let's call it a rectangle. Yeah, though I see that we are starting to see lower lows. This is not a good sign for the bulls. If bulls are to maintain this momentum, ideally you want to see this level break, but it doesn't look like we are going to break. It actually looks like the bears have slight control. What do I mean slight control? I want you to see the bull bars, how they have been printed on the chart. Look at the green candles, look at the red candles. Just look at the swings. Look at this swing. We have 3 candles downswing. Then how many candles to form an upswing? Looks like the bulls are struggling. Then how many candles on the downswing? How many on the upswing? You see, when we're going on a downswing, it's just one color, one color. When you're going up, you're seeing a mixture of colors, But do remember, I'm not calling a short yet. Why? All these, always look at price action in view of the bigger picture. We've been bullish for a while. So all this consolidation is happening within. You see this swing point, it's bullish. So we have all this consolidation happening within a bull rally. So the best case scenario for a short we'll see is to see price continue printing the lower lows until we break this level, this support area around 126, which is also a big figure. If we break that, I'll still not taking a short. I will take a short once price breaks this key swing point around 125. So my best case scenario for short is price closing below 1.25. Why? It's a key swing point. It's a big figure. Price will clearly be below the 20-day EMA, and price, and more importantly, price will have broken a swing point that led to the highest high. So you see, once price formed this high, we failed to break above. So for me, this is what I'll consider as a trend change. When we close below 1.2500, then I'll consider a trend change and I'll be going short. But for now, just a wait and see how this range plays out. In any case, if we close above 1.20, let me call it 1.28, around that 1.28 region, I'll be bullish, probably targeting the 1.3 region, but that looks highly unlikely. But let us see. Price is king. I always follow price. Price will tell me what to do, and for now it's telling me to sit out. The OZ. Let me start with the weekly for the OZ, because this is a pair that I've not discussed in this channel before. The OZ is bearish. I mean, look at this pattern. Look at this pattern. From a classical chart point of view, I don't know what this is called. When you look at the Japanese candlesticks, I think this is the evening star. Yeah, evening star, clearly a bearish. This 3 candle pattern is bearish, though I don't see it forming from a key level. Yeah, it's actually a key level, a swing point. Bearish, though I don't like how the past few weeks have closed. You see, this week, I don't like these. If ideally you're bearish, you don't want to see this long wick, because this long wick is more than 50% of this body. Look at the following week, a spinning top, indecision. So we are seeing a lot of indecision from the Australian dollar, but what might happen is that we might see a retracement towards this 66.40 region. Actually, when you're looking at the weekly, remember this candle represents a week's price action. So from the daily, this actually will be 5 bars. On the half hour, it will be more bars. On the 1 hour, it will be even more bars. On the lower time frames, on the 1 hour, this could actually be a trend on the 15-minute chart. So I can easily pick this area where we broke as the next support resistant areas to monitor. I wouldn't do that on the lower time frame because 2 bars really on an hour chart, even H4 is not enough to make a decision on whether a level is support or resistance. But on the higher time frames, on the daily and the weekly, I usually do that because it represents a lot of candles on the lower time frames. So for the coming week, I'll be looking out for this 6640 region, 6650 region. If we do see a retracement toward that level, I'll be shorting. But I think we are closer to 6500 than we are to that 6650 region. And we can look at the daily, look at how it's playing out. Yeah, we are closer to this level than we are to here. So if we do get a retracement, will I short it? No, I will not short a retracement. I'll actually be looking for a close below 6500, 6520, 6500. Remember, support and resistance is a zone. Why will I not short a retracement? That retracement will be coming off a key swing point. Remember I mentioned, I think this was the New Zealand, yeah, it was on the New Zealand idea. Once price breaks a low, you want that retracement to happen before it hits the next key level. I wouldn't want a retracement that is coming off a key level. Intraday is good to do. Intraday you can go long. If you go on the shorter time frames, the 1 hour, 15-minute, you can easily get a long idea around this level. But for me, I trade the daily chart, and the daily chart is showing me bearish signals. We are clearly below the 20-day EMA. So I'll want a scenario where if you're retracing, let it retrace. The best case bearish scenario is price retracing to this swing point around 6640. Then that level holds a resistance, comes back down towards the 6500 region, 6530, 6500 region, and breaks that level. I would like to see price consolidate around that level, see a bit of lower highs in that level, then price finally breaks. If that happens, I will go short on a retracement toward that level and target some of these levels around 6350 and also probably 62, around 6300. Yeah, I can say 6300, the next key level, basically the beginning of this swing point. See this massive movement, yeah, these upside movements started here. When you fail to break these levels here, probably that's what I'll be targeting, because I usually like targeting key areas. Key areas actually makes it easy and gives me good R. So that's the Audi USD, Canada dollar, sorry, the Canada yen. Just take you to the higher time frame. This high is from 2022. Yeah, this is a high from 2022, and price has failed to break this level on several attempts. So this is a level to actually watch out for. The level comes in around 110. Let's put it 110. The level actually, it's a high, it's a huge zone. We've seen around 110, and also there's a 111. But once price is comfortably above those levels, it will be a good idea to go long. On the weekly, we are seeing a consolidation. We've been bullish for a while, but it's not the type of bullish environment you ideally want to be engaging in, because it will not give you sufficient R, because you're too close to a resistance zone. And just to show you something, see the aspect of correlation. When you're looking at pairs, it's important to also be keen on aspects of correlation. Pairs that move along, you don't have to be taking two positions, you say, or you have, let's say, for me, I trade, I risk 1%. If I'm risking 1% on a pound trade, I would ideally wouldn't want to take another 1% trade on the euro dollar. What I usually do is split my percentage, probably take 0.5% on the pound and 0.5% on the dollar. And the reason why I'm bringing it up, you see this price, how this price is playing out. It looks familiar. Yeah, looks familiar. Remember the Euro Japan trade that we just looked at? That price actually looks familiar. True or false? True. Looks familiar to the USD Japan. True. Yeah. So there's a lot of correlation. So when you have a lot of correlated trade in your when you have a lot of correlated pairs in your portfolio, ideally my best advice is one, split your position size, or two, just take the best price action of all those. Like for me, the best price action was for the last week was the Euro Japan. It was playing out well, and that's the trade I took. You don't have to take all of them. If you want to take all of them, just split your positions. But ideally for the Canada Japan, we'll be looking at the 110. If we do break, because I love how price is approaching the 110, it's a really efficient move. Ideally, when you see efficiency in a move, what do I mean by efficiency? Price breaks a high, retrace. So you're not seeing a lot of gaps. Price probably will break this, then retrace. So probably consolidate below that level and break out. That will be a good long trade. But what you don't want to see is price approach a level aggressively, just comes all the way up. No retracement, wide bars to a level. Usually that level will not hold and actually probably just sell off a bit. But this one I see an efficient move. I'm not seeing a lot of gaps, unfilled gaps. So this is a really efficient move and actually might see price break 110 in the coming weeks. But let's wait and see. For now, the overall trend is a consolidation. The short-term trend is bullish. So let us see. So we are bullish in a consolidation. So the best trade will be a close above 110. I did not take this move around 109. I actually prefer the Euro Yen trade to the Canada Japan trade. But let us see how it plays out for the coming week. The pound yen bullish, bullish. Same scenario. We see a bar engulfs this price action, price breaks, retraced, and now this is the type of price action I was speaking about where I will necessarily say this is an efficient move. Why? We broke a high and went all the way to a key swing point high. This is a multi-year high, actually from 2023. We've not broken this region around 188. So for these trade scenarios, you can actually go to a lower time frame and short once price is testing this level. You just go to a 1 hour or a 15-minute chart and see how price is behaving around this level. It can actually offer you a very good short opportunity. Yeah, because one, it's inefficient. High likely that this inefficiency will be filled in the coming weeks. Let's look at the weekly. That's a key level. Remember, I use the weekly for my key levels. Yeah, that's a key level. If we come down, this is the previous swing point I'll be looking at. Yeah, so that's the range I'll be looking out for the coming months, weeks. Yeah, but if we do break 188, 189, I'm bullish. So same scenario as the Canada Japan. Same scenarios. So now we are consolidating just below that level. Look under the lower time frame. Yeah, you can see we are consolidating below a level. I see we do have an inefficiency. I would like to see this inefficiency get filled before we actually break out. But if we do break out before that inefficiency is filled, there's nothing wrong with that. I'll still be bullish. Why? We've been seeing a bullish momentum, and if this behavior meets my requirement of a valid breakout, ideally I'll just go long once we are above the 188, 189 region. So what's a valid breakout? A valid breakout is where we have a clearly defined level. We have a clearly defined level at 188. We have two touches, 1, 2. This one we have actually 3. You want to see a lot of touches, and that level must be clearly seen on the higher time frames, the weekly and the daily. Then you want to see, let's say if it's a bullish breakout scenario, I want to see higher lows to the level, higher lows to the level, higher lows to the level. Yeah, you want to see higher lows to the level, higher lows to the level, higher lows to the level. This actually allows you to place a stop loss, higher lows to the level. Sorry. Yeah, you want to see higher low. Let me just delete this and start again, just to show you. You want to see higher highs, higher lows. So you want to see a scenario where, but you also want to see the last high touching that level before it breaks out, so that you at least have a cushion when you're putting your stop loss. And you want to see an EMA carry. You want to see price squeeze an EMA closer to that last squeeze before a breakout. Those breakouts usually work out most likely 70% of the time. I mean, if you have a trade idea or a trade plan that works 70% of the time, then why not take it? As long as it gives you above 2 hour every time, I mean, you're on your way to profitability. So I'll be monitoring how these bars print out for the coming weeks. But so far we are consolidating below a key level. So this one is a wait and see. Depending on how we behave, we might see a retracement towards this level of inefficiency, or we might actually close above. But I don't like trading reversals. So most of the time, these trades where it hits a key level, comes back, I rarely do that. Unless this swing point was lower. See, if the inefficiency started somewhere here and we just went up, that will give me room, at least from an R perspective. If you're trading a reversal, you want the R to be higher. You want the reward to be worth the risk, because it's high, it's very risky. Yeah, like this one, I think we are too close. Unless you short it, immediately touches the level. But the danger of that is you may not know where to place your stop loss, because price might pierce through. See how it pierced through? That's also saying you can now go to the lower time frame, the 1 hour if you're a day trader, just to see how price behaves around this level. See if you can get a short idea. But for now, price is consolidated on the pound yen. Gold, as I'd mentioned, I'll be watching how we play around the 2000 level. I love how it's behaving. See the two touches? Price did break. It did find support over here. This is what I call, if it breaks out, this will meet now my prerequisites of a valid breakout. Why? This is a clear or reversal level. It has held as a resistance before. It has held as support before. Ideally, you want to see weak bounces. Let's say for a valid breakout, you see the way it bounces, it's very weak. I want it to come again, probably do a small bounce, very weak. So for a breakout to the downside, ideally you want to see lower highs to the level. See, lower highs to the level. You see how EMA is squeezing. You want EMA to squeeze this moving average, to squeeze price until it breaks out. You want a breakout candle whose body is more than 50% of the body is below this level. Then you just enter on a retracement and target the next killer area, which for me will be the 1939. So why not the 1973? Let's look at the weekly. Is that just a weak point? Yeah, I prefer where the bodies are. This is where I'll be targeting. But this is an area where you ideally monitor. You see where this week is? Basically this price action. Let's say you're already short. This is an area where you monitor and actually might give you reason to probably take out partial profits. I'm not a fan of partial profits, but this is an area where you use now to manage trades. Depending on how price behaves around that level, you can decide to take either partial profits or move your stop loss to break even. USD card, I rarely trade this pair. As you can see, it's messy. Yeah, does not give me a clean trade in ages, even a clean trend in ages. See how choppy it has been for a while. Yeah, this pair has been choppy since 2022. Even if I zoom out further, this is a very big range. Look at the long-term movement of the EMA. It's actually sideways. Yeah, we've still had trends within that big range. This was bearish. Looks like we are bullish right now, but we are consolidating. So it will be important to see how price plays out around the 134.88 region. I see there's a tug of war. Price closed, came back. Price closed, came back. This is just H4. Let me go back to my price action time frame. Yeah, there's a battle, and let's see who wins this battle. If the bulls win and we see a close and hold above the 134.86, I'm actually take a long trade and target this region, the start of this rally, target around 136.20. But the chart is not really clean. Yeah, the chart is not really clean. The dollar index I'd mentioned last week, I was anticipating a retracement towards 102.62. We did not get that. Price actually traced to this swing point here this week. Price is still ranging. This is sideways movement. There's a lot of indecision, so it's a wait and see. We're not seeing that rally that I'd wished to see, that I'd hoped to see, where price retraced. We did get a deeper movement, but we did not test the level how I'd wanted it to test. So I was expecting probably when we go to these levels it will hit and go up, but that's not the case. I think price is consolidating, waiting for FOMC. Yeah, because it's the dollar index. So depending on the outcome of FOMC, we'll see how price plays out for the coming week. So far, it's a wait and see. So let's wait and see. I actually say let's wait for FOMC on Wednesday. FOMC and see how price plays out. For now, it's sideways. but depending on how it plays out long term, actually determine the trend on the euro dollar, determine the trend on the pound USD. And just to show you the correlation between the two pairs, let me add. I've added the euro dollar on this chart. I want you to see the correlation. See, when the DXY is down during this period, the euro is up. Yeah, there's a negative correlation. So you always, whenever you're trading the euro USD, always put your eyes out on, always look at the DXY. Always look at the DXY. You see, like right now, see from here, what do you see? The DXY is going up, the euro dollar is going down. See, yeah, up, euro dollar is going up, is going down. Actually, the DXY is an inverted chart of the euro dollar. How do you invert? Think it's alternate I. You see, I've inverted. I just pressed alternate I on my keyboard, and what do you see? Voila, the euro dollar chart. So they are negatively correlated. This is actually the euro dollar chart. If I go to the euro dollar chart, let me just invert it back. Let me go back to the euro dollar chart to see. You see? See the movements. If I invert the, now look, I want you to see, how this chart looks like. See, you going down, consolidation, going down, consolidation. Now we are going down. If I go to the DXY and invert it, alternate I, what do you see? It's the same chart as the euro dollar. So these are, whenever you're trading correlated pairs, always look out for price action on the other pair to avoid you taking too much risk. I like to skip the Audi Japan for now. I do also look at crypto, but I would like to skip these cryptos for now. I'll probably be taking you through these in the coming weeks. There isn't much going on for now. So that's it, traders. Hope you have a wonderful weekend ahead, and see you in the coming week. Take care. We have a lot of data releases coming out next week. Just be careful. Yeah, cheers.